Hello and welcome to this week's strategy video with me, David Jones, and Trading 212. As we did the MACD last week, I thought we'd go at a slightly different angle this week. The video we did about most common trading mistakes proved to be very popular. So I thought, let's look at maybe a step on from that and focus on one particular part of trading where I think plenty of mistakes are made. And look at ways that maybe we can refine our approach. So this week, I'm going to give you 3 tips for do's and don'ts when it comes to setting stop losses on your trade. So let's get started. I think tip number 1, a really common mistake. We've mentioned it before, but I think it's worth mentioning again. Give the market time to prove you right. I think too many people, when they start trading, they're so worried about losing too much money that they end up setting really tight stop losses. And I think it's far more sensible to give yourself a bit of room. Maybe trade a bit smaller, but have a wider stop loss. Let's just look at a chart to see what I mean. Let's use euro dollar as our example here. So we've got an hourly chart of euro dollar going back from the 8th of August through to the 21st of August. You can see here 1, 2, 3, 4, 5. The last 5 hours, the euro has been rising. So it's gone from about 117.40, currently trading at 117.95. So it's had a 55-point move. So you may decide to buy in here, but again, don't assume you're going to be right straight away. Just look at the range just 3 hours ago. So during a 1 hour period, it went as high as 117.82 and as low as 117.58. So that's a 24-point range just in an hour. And there are plenty of examples, if we go back in the past here, where the euro breaks out through a level, but then will chop around and sell off before continuing the move. So even if you think the market's going to move quite a bit higher from here, because it's broken through the highs from 4 days ago, give the trade time to work out. You know, if you're setting 10, 15-point stop losses, you're not giving the market time to move in your favor. So pick, I don't know, a bigger level. Let's say we went back even to the lows of the day. If you're expecting a much bigger move, there's an obvious level back there. You know, so we need to give the market a bit of room to move around. If we're setting too tight stop losses, we'll just get taken out in the day-to-day volatility. So there we go. Don't just pick stop losses like that out of thin air and set it 10, 15 points away, because in a volatile market, you'll just get taken out of the trade, and it may have ended up being a good trade. You know, give the trade a bit of breathing room. Assume that when you put the trade on, the market may well move against you for a little bit. It might take a couple of days for the market to start moving in your favor, even on trades that work out well. So give the trade time to work out. Don't set stop losses too tight. Now, I think the second mistake people make when setting stop losses is they base it purely on a monetary value. So they might trade the same size every time, let's say 10,000, 20,000, 50,000, and they think, well, actually, I only want to lose 20, 30, 40 euros on this trade. The market doesn't care how much you're going to lose. So let's have a look at this common mistake and how we can avoid it. Let's say we decide to take our trades. We'll right click and we'll bring up the detailed trade box. This is where euro dollar is currently trading. We may decide to trade just a 2,000 position. The market is 117.97 to buy. Of course, that will change as the underlying market moves around. Now, if we're sensible, we can place our stop loss before we place the trade. But I suggest that placing it on a monetary value isn't the right way of doing it. Let's say you thought, I only want to lose 10 on this trade. So I'm going to put that in the pound box there. And it comes up with where my stop loss will go in. But that's a fairly random stop loss. The market doesn't care that you just want to lose 10, 5, 20, whatever it is on the trade. So I'd suggest the correct thing to do is look to place the stop loss at an obvious point on the chart. So if the market drops below a certain level if you're buying, or goes above a certain level if you're selling, that's where you come out of the trade, rather than just basing it on an arbitrary amount that you're willing to lose. And the final tip, this is an obvious one, but you'd be amazed at the number of people who don't do it. When you've spent the time analysing the market, deciding where you think it's going to go and where you think you should get out if the market moves against you, then place your stop loss in the market with your broker. You can place the stop loss even before you've opened the trade. There are all sorts of conspiracy theories that people love about if they place a stop loss in the market will move to it. Do you really think the market is that bothered about your trade? It's really easy to do. So let's take a look at this important discipline when it comes to trading. So we've decided on our trade. We're looking at euro dollar, and we think even though the euro's rallied, it's not going to last very long. So you want to be a seller, we think, and we want to have a stop loss above the market. And we think we want the stop loss somewhere up above these highs, so around about 60 points away. If we right click, we can bring up the detailed trade box. We click on sell. We decide to trade 10,000 in this example. So if we know where our stop loss is going to be, there's really no excuse for not setting up the stop loss before we do the trade. And I said about 60 points away, so that would be 118.56. So if I'm happy with that, I might want to bump it up a bit higher, maybe 65. That's where the market's currently trading. I want to trade 10,000. There's my stop. Confirm sell. And there we go. The trade is done. So you can see down below, here's my position. Euro dollar. Quantity I chose was 10,000. I sold. I think the price is going to go down. That's the price I executed the trade at. There's the current price. And there is my stop loss. And you can see on the chart, I've sold it here with a stop loss above those highs. So there's really no excuse for not setting up the stop loss before I put the trade in. It's a very disciplined and sensible way of trading. So there we go. Just to recap, because I think it is really important, because I think in the beginning, setting stop losses can be incredibly frustrating for most new traders, and they see their stop loss get taken out and the market go the way they thought it was going to go, or they don't set a stop loss and they end up with a much bigger loss than they planned on. So just to recap, don't set your stop loss too tight. Give the market time to prove you right. You're probably not going to be right straight away. As soon as you buy, the market is not going to take off. As soon as you sell, the market is not going to collapse. You need to give the trade a little bit of wiggle room. Don't just base your stop loss on a monetary value. The market doesn't care that you only want to lose 20, 30, 200 euros, pounds or dollars. You know, place it on, if you're looking at charts, look at previous highs and lows and think, okay, if the market takes this level out, then I'm probably wrong on the trade. And thirdly, and arguably the most important, once you've done all this work and decided where your stop loss should be, place it. You know, put it in there before you place your trade maybe, or add it once you place the trade, but have it there, because, so that way you don't have to watch the market 24 hours a day. Plenty of markets these days, of course, do trade around the clock, and I'm sure you've got better things to do than sit there and watch prices change. So place your stop loss with your order when the trade's opened. That's it for this week. As usual, if you have any questions or comments about what we've talked about today, or anything you'd like to see us cover in the future, just leave us a message in those comments below. If you like the video, click the thumbs up, and if you're not subscribed, if you click that button there, you'll get automatically subscribed and notified when the next trading video is uploaded. But for this week, from me, David Jones and Trading 212, we'll leave it there, and I hope you have a good trading week.